And on the autonomous vehicle side of things, we think that the robotaxi industry could be worth $28 trillion by the end of the decade. This is why when you look at our Tesla valuation, this is where we think the majority of Tesla's value will be generated from, because it'll totally change the business model from what is essentially a one-off sale of an electric vehicle today to a recurring revenue stream that we think could be generated off of the robotaxi service that Tesla will launch. And of course, we think robotaxis are so disruptive because they can be priced lower than today's ride-hail options and much lower than the price of driving your personal car in the US today, which is around 70 cents per mile. So at scale, robotaxis could be as cheap as 25 cents. But in the beginning, we expect higher price points. So when we evaluate names like Tesla, in the valuation, we look for each company to pass at least a 15% compound annual growth rate hurdle over 5 years in our valuation. And as we're doing our initial work on the name, we're assessing it on a qualitative basis. So you can see here on the slide, first we look at people, management, and culture. This takes into account our thoughts on the management team. Sam, why don't you kick us off on Tesla here?
Yeah, and I'll just say these qualitative scores.
Regarding autonomous vehicles, we estimate that by the end of the decade, the robotaxi market may be valued at $28 trillion because it will fundamentally alter the company's business model from what is currently effectively a one-time sale of an electric vehicle to a recurring revenue stream. We believe that this area will account for the majority of Tesla's value when you look at our valuation. We think that Tesla's upcoming robotaxi service may be the source of this. The fact that robotaxis may be purchased for less than current ride-hail services and significantly less than the cost of operating a private vehicle in the United States, which is now about 70 cents per mile, is another reason why we believe they are extremely disruptive. Although we anticipate higher price points initially, robotaxis could be as inexpensive as 25 cents per mile when scaled up. We determine the valuation of companies like Tesla by making sure they meet a minimum 15% compound annual growth rate, CAGR, threshold over a 5-year period. We evaluate the name qualitatively as we work on it first. As the slide illustrates, we start by examining people, management, and culture while keeping in mind our opinions about the management team. Why don't you introduce us to Tesla here, Sam? To put it simply, these qualitative scores are very important. The potential for Tesla's robotaxi, the security of autonomous vehicles, and the difficulties Tesla has in the Chinese market are just a few of the important subjects we'll discuss in this video as we examine the degree of confidence in Tesla stock. We'll also explore Elon Musk's pivotal role and the company's potential for expansion through creative initiatives like the Megapack division. We'll talk about the regulatory issues surrounding autonomous vehicles being eased, the optimism and delays surrounding Tesla's robotaxi network, and the significance of depending on various sources and verified facts for reliable information. We'll also discuss the difficulties in assessing Tesla's autonomous driving company because of cautious assessments and erratic market patterns. Prepare yourself for a thorough examination of the factors that analysts believe are behind the sharp increase in Tesla stock prices. This video is for you if you have a strong interest in Tesla and the development of autonomous technology. To remain up to date on the most recent Tesla news and insights, remember to like and subscribe to Tesla Stock News *. Let's get started. Let's now examine the likelihood that Tesla's robotaxi will materialize and the implications of the legal environment for the company's aspirational goals. We'll also talk about the safety of driverless cars, which is a hot topic because both regulators and prospective buyers are quite concerned about safety. Although it has its own set of regulatory obstacles, China is a sizable market for Tesla. What obstacles must Tesla overcome in order to be successful there? Cayman risk, which deals with Tesla's significant reliance on Elon Musk, is another crucial factor. What would happen if he took a step back? We'll talk about the dangers of having someone so important in the business. How much is Tesla worth, and what are investors assuming about its growth? Are these too optimistic or realistic? For years, Elon Musk has been promising us a completely driverless vehicle, but it hasn't happened yet. Achieving complete autonomy is difficult. It involves more than simply building a car that can drive itself. It also involves making sure it can do it safely in all kinds of situations. Based on thorough examination and safety data, some academics think that a robotaxi network might be launched in the coming years despite the delays. Timeline uncertainties, however, continue to be a major obstacle. On the regulatory front, there is positive news. More states and nations are becoming receptive to the concept of autonomous vehicles, according to Tasha Keeney of ARK Invest. This represents a significant change from the previous position of strict restriction and skepticism. The startling increase in traffic accidents and fatalities, which are frequently caused by distracted driving, particularly when using smartphones, is one factor contributing to this shift. By lowering human error, autonomous cars may contribute to safer roads. Tesla's plans may benefit greatly from this relaxation of regulatory concerns. Imagine hearing this news as an ordinary American. Given the delays thus far, you may have doubts about Tesla's capacity to introduce completely autonomous vehicles. However, you may feel more optimistic that these futuristic cars are getting closer to being a reality now that regulatory worries have subsided. Additionally, you may be worried about Tesla's dependence on Elon Musk and worry what the company would look like without him leading it. All things considered, you may be cautiously hopeful about the prospects for safer roads and creative mobility options, but you are still awaiting the real results. According to Cathie Wood of ARK Invest, driverless automobiles are far safer than cars that are operated by humans. Based on accident statistics, driverless cars may be up to 80% safer, per data cited by ARK Invest. For example, compared to a manually operated Tesla, the fully autonomous system is approximately 5 times safer, and there is room for development. This significant safety margin is revolutionary for transport in the future. Tasha Keeney highlights how these safety enhancements have an impact. According to her, fewer collisions translate into safer roads, lower insurance premiums, and more public trust in autonomous technology. For everyone worried about road safety and driving in the future, this safety factor is a big matter. It demonstrates why ARK Invest has such high hopes for Tesla's autonomous car plan and its ability to completely transform the auto industry. Additionally, Cathie Wood draws attention to the regulatory obstacles that Tesla is currently encountering in China. The potential for the corporation to take data outside of China is being discussed with the Chinese government. This is a sensitive topic since Tesla's business operations may be greatly impacted by Chinese laws governing AI and autonomous driving. In such a large and significant market, Tesla's success depends on navigating these regulatory seas. The results of these talks may establish a standard for how foreign businesses manage data and AI laws in China, Tasha Keeney continues. The stakes are enormous, and how Tesla handles this issue might have an impact on industry norms for data handling and AI research, as well as its future in China. For Tesla, this is a crucial moment, and ARK Invest is keeping a careful eye on these events. Although there are risks associated, new routes hold promise for Tesla's growth. Driving the autonomous team towards a commercial launch is a major responsibility of Elon Musk. Tesla's success in this field is largely due to his leadership and vision. Finding a visionary leader to succeed Elon Musk is difficult, though. Maintaining this kind of creative leadership is crucial to the company's future success, so Musk's departure might be a serious risk. Autonomy and automobile technology are developing at a breakneck pace. Elon Musk has played a big role in advocating for autonomy, but as technology and algorithms develop, his influence might not be as important in the future. These developments are propelling the sector ahead and increasing the dependability and effectiveness of autonomous vehicles. The enterprise value to adjusted EBITDA is also impacted by elements like stock-based pay and R&D expenditures, demonstrating the financial commitments Tesla is making to maintain its competitive edge. With its unique products and planned projects, Tesla has a bright future ahead of it. The business has remarkable revenue potential and profit margins, especially in its Megapack division. With plans to establish a second Megapack facility over the next 6 to 8 months, this category is well positioned for growth. It is anticipated that this development will greatly increase Tesla's revenue and demonstrate the company's capacity for innovation and market expansion. It's critical to take into account the comparatively low multiples being used when evaluating the valuation of Tesla's autonomous driving business lines. Even with this cautious approach, substantial growth is anticipated in the fifth year, making it difficult to determine the business's true value. It is challenging to model these autonomous cars and forecast market trends, but doing so is essential to comprehending Tesla's long-term prospects and the actual worth of its creative endeavors. It's critical to rely on verified facts and a variety of sources for information in the fast-paced world of today. This method guarantees that we obtain a comprehensive understanding of any subject, especially in the field of technology. Bold predictions and data-driven analysis are immensely helpful since they give us insights derived from actual facts rather than conjecture. By focusing on the facts and looking at a variety of sources, we can make better decisions and forecasts. One important